Hello everyone, it's great to have you on Business Incorporated. I am BC Adebayo. Coming up, Kenya's main stock index hits 14-month high as investors welcome President Uhuru Kenyatta's re-election. And South African court affirms the country's central bank's inflation targeting mandate. Plus, Barclays Bank of Kenya declares lower pre-tax profit of $49.69 million in the first half of 2017. Well, let's kick off today's show in Kenya, where the main stock index hits a 14-month high on Monday as investors welcome the re-election of President Uhuru Kenyatta. The index rose 2.51%. The NSE 20 index has risen nearly 7% since the election last Tuesday. The Kenyan shilling also firmed on Monday to touch an intraday high of 103.65% per dollar from 104 before the election, while Kenyan dollar bonds have also rallied after the election. Monday's gains by the blue chip index were led by electricity distributor Kenya Power, which was up 9%, and lender KCB Group, which was up 8%. Analysts attribute the surge to investor confidence in President Kenyatta's economic policies. And the South African court has affirmed the South African Reserve Bank inflation targeting mandate. Public prosecutor Busisiwe Mkhwebane sparked a political row and a big sell-off in the rand currency when she proposed in June that the central bank's monetary policy target be changed from inflation and currency stability to economic growth. The case was brought before the court by the central bank, which said this undermined its independence. The public protector has since backed down and said she was wrong to order the change to the bank's mandate. The judge ordered the public protector to pay the costs of the case. South Africa's central bank has welcomed the court judgment. In the meantime, the South African rand firmed on Monday, boosted by Moody's decision to delay ratings decision on the sovereign that was scheduled for last Friday. Government bonds also firmed, with the yield for the benchmark paper falling 4.5 basis points to 8.6%. The Treasury said Moody's could not publish its rating decision on Friday as the firm had already made 2 changes to the country's debt status. Moody's, which in June cut its rating to 1 notch above investment grade with a negative outlook, is instead expected to publish a rating opinion on South Africa today. A downgrade by Moody's could have left South Africa rated junk by all 3 major agencies after the sovereign debt was cut to sub-investment by Fitch and S&P Global Ratings in April after President Jacob Zuma fired Pravin Gordhan as finance minister. Well, let's look at the markets now, beginning from Africa, where the indices are mostly in negative territory at intraday. The Nigerian offshore index is trending lower at 37,739.09. The South African Bursa is also down 0.51% at intraday. Egypt's index, which dropped below its July low of 13,261 points, as well as support on its 100-day average, is now at 13,167 points, down 0.15%. And just as we mentioned earlier, the Kenyan market closed at a 14-month high with a 2.31% surge on Monday. In the meantime, Middle Eastern stock markets continue to struggle with an absence of positive factors on Tuesday as corporate earnings once again weigh on Dubai. The index is 0.18% lower at intraday. It's the same story in Abu Dhabi, where the index is 0.21% south. Qatar's index also maintains a downward trend, and the Saudi index is the only market in the green at 7,126.52 points. And European stocks continue to rise today, with investors encouraged by North Korea's decision not to follow through with its threat to attack U.S. island territory Guam following a war of words between the 2 nations. Also, economic growth in Germany unexpectedly slowed in the second quarter, with gross domestic product expanding 0.6% compared with 0.7% at the start of the year. DWTV Channel's TV financial correspondent, Orich Bartz, is at the Frankfurt Stock Exchange to tell us more about the markets today. It's great to have you, Orich. With North Korea's face-off fading out, U.S. President Trump now faces China over trade practices. What's in this fight for Washington and Beijing?
Well, at stake is, on both sides, a huge amount, because if it results in a trade war, then it damages both the Chinese and the American interests, consumers on both sides, businesses on both sides. Donald Trump has made it quite clear that he doesn't like Chinese trade practices, the strength of the Chinese exports that they successfully position with American businesses and consumers. And the Chinese don't like criticism of that. Now, there's not yet a trade war with tariffs imposed on both sides, but President Trump seems adamant on getting this underway, and people all around the world are watching with some trepidation. A calculation that was made by the German Chamber of Industry and Commerce here in Germany says that with the volume of German exports to the United States and China, about 10 to 15% of German exports would be in some way involved, affected, if the two countries waged a trade war with one another.
Well, Orich, the U.S. President Donald Trump is a billionaire businessman. Why are company CEOs dumping his manufacturing council?
Well, they weren't satisfied, pleased by his remarks, his initial remarks, one must say, on that violent racist rally in Charlottesville in Virginia. He placed blame for this incident on both sides, and thus putting the civil rights people in the same boat as the white supremacists. He since has rectified that. He criticized the white supremacists in no uncertain terms. But before that already, major CEOs of major U.S. companies had resigned from an advisory panel, making it quite clear that this was not the kind of policy that they were willing to support in continuing to be on an advisory panel. There are perhaps personal ethical questions involved. One would want to see that as a motive for these executives, but it's also good business sense in the United States to deal this way, because whenever American consumers have the feeling that their company is in some way being racist or tolerating racist policies, they can go as far as a boycott. There can be a big public storm. So this was, when you know the situation in the United States, not really all that surprising a reaction from the business world.
Now, let's talk about Germany, where you are. Second quarter GDP growth comes in today at 2.5%. Now, that's decent, but not really spectacular. Will this data strengthen incumbent Chancellor Merkel's campaign against rivals?
Well, Chancellor Merkel is the leader. She's the chancellor. She's the top political dog in Germany. So with all the rights that her office bestows on her, she can claim that that's my economic upswing, that's my economic strength and stability. But of course, it's the whole government. It's a whole lot more people. It's the corporations. It's the workers. But she sets the top policy, and her finance minister, Wolfgang Schäuble, also has a big hand in this. And Chancellor Merkel has also continued the tough labor market policy of her social democratic predecessor, Gerhard Schröder, and that's also seen by economists as a major contributor to this economic strength. Now, Martin Schulz, the today social democrat and opponent, he can claim that socially devised policies made by representatives of his party in Merkel's government were also good for the economy, and that they strengthened consumption, consumer confidence, and consumer trends are also a big part of this. So it's not black and white. I would say the advantage is a little bit, though, in Merkel's court.
Many thanks, Orich, for those updates, and let's do this again tomorrow.